right, welcome back to another episode of Forex Tech Magazine. It is your host, Lewis. Today is February 22nd, 2019. Sorry about yesterday that we did not air yesterday. I do apologize. Unfortunately, though, we was having some severe weather, and I was just not able to make it. Also, too, because I was feeling under the weather, just wasn't able to make it. But I am back and ready today to go through some trades with you. So I hope you are ready to go through some trades with me. Um, Before we get into that, though, let's get into this. The disclaimer, and it goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. If you are in need of financial advice, then our suggestion to you would be to seek out the assistance of a licensed, competent advisor. So let's get started. First of all, let's look at, I don't think we went over this last time, but let's look at this right here, which is our totals for this week so far. And let's talk about this for a minute. So earlier this week, we got into the Great Britain Pound Canadian dollar, then we got into the Great Britain Pound Aussie dollar, and looks like we opened up the Great Britain Pound Canadian dollar on the 18th, and we opened up the Great Britain Pound Aussie dollar on the 19th. Both of these were closed out on the 20th, and both of them closed out for a profit. So we made, what is this, 3,594 on the Great Britain Pound Canadian dollar, and another 2,574 on the Great Britain Pound Aussie dollar, which is pretty cool when we look at it. Let's look at that trade. Which is pretty cool. Here goes. And here's the thing, too. We didn't, when we did this, what we did is we did a risk-free trade, right? So these are not trades that hit our D extension. These are actually trades that that we went in and we put a risk-free trade on, right? And just let it go from there, because as you can see, here goes the A, here goes the B. The C originally was here, right? But then it came all the way back down to here, right? And unfortunately, if you didn't have enough money in your account, or if your leverage too high, a move like that pretty much empty out your account, right? Or cause you to have a margin call. Yeah, in this particular case right here, it was 83 pips. So it wasn't too bad, but it was bad enough, right? So what we did is we did a risk-free trade. Essentially, it means that, when price crossed over to the buy side, once we got profitability, we lock in that profit, and then we let price do whatever it wants to do. And when price starts to move back down, we didn't worry about it because we had a profit locked in. So no matter what happened, we're going to make money off the trade. And we did it somewhere, I think, over in here, right? Because as you can see, price went all the way down. I'm sorry, no, we didn't go over here. We did it over in this way, area over here. But as you can see, price went all the way down, put all the way back to that, what was that, a 6.6 something extension. And then price proceeded to move up from there, right? Really deep pullback, then push back up, right? And it actually did wind up going up to the D extension though, so that's pretty cool. But we were out before that happened. Got out a day early, which that's okay because we made good money, right? And once again, the whole point of this exercise is to see if which one's a better way to make money. Would it be better to go in and just stay and stay for the whole entire ride and go through the whole drawdowns and then pullbacks and everything, and then make money, or to just put on risk-free trades? And I got to tell you, I like the risk-free trades. I think I like them better than just sitting there going through the whole pull back and then push up, pull back, push up. Yeah, you got to be a little bit more active with your trading. Yes, you have to check your, for alerts and all that stuff to see if prices cross over into your buy zone. But that's okay. You set your alerts. You can set your certain things you can do that will help you with tracking that. So you don't have to be stuck at the screen all the time. Um, but I got to tell you, I think it's a better way to trade just because you don't have the stress of sitting here watching your account balance go down and potentially getting a margin call and having to put more money in the account for it to go back, for you to be able to hold that position or have to reduce the trade to hold that position. With this particular trade here, we actually leveraged up 10 times the standard lot, right? Which is a lot. Is why we were able to do almost $4,000 with 47 pips, right? Essentially it's close to $100 per pip, right? Which is a ridiculous amount of leverage. Um, but felt comfortable with doing that just because of the fact that once price went into profitability, locked in that profit, and then pretty much was guaranteed to have a profit no matter what price did. So it's a little bit more riskier the more leverage you use. So you need to find ways to use the leverage, but also use it to your advantage and use this, you know, price action to your advantage. So anyway, that's what I initially recommend. Always check your leverage with your account. Make sure this is actually um, makes sense. This right here, we're just doing some experimenting right here. This is a demo account, so we don't take it serious, but we just want to just kind of test it. And once again, you should test any theory out on demo account before you test it out on a real account. And the test proves it was accurate. And the cool thing about it is that we get to multiply or leverage our account multiple times doing a take profit or risk-free trades, right? So imagine if you do it here, right? Wait for price to cross over, we buy in, price goes up, we lock in our profit, price pulls back, we get out, right? Wait for price to go back over again, we get back in again, right? So we're multiplying our price, and you get the idea. Multiplying our price or multiple times, or multiplying our accounts multiple times, right? Because we're getting in with leverage each time, and maybe because there's been a profit, in the account, we're able to use a little bit more leverage each time to push price up. And if we do this enough time, then that account balance, of course, is going to really grow exponentially over time. So I think it's a better way to trade. Like I said, we're not having to sit here and wait through these pullbacks and stuff. Once price hits our stop loss, we're out, but we're out at a profit. We wait for price to go and become, instead of having to sit here and wait through this right here, where we're pulling back, pulling back, pulling back, pulling back, pulling back, hoping price is going to turn around. In this particular instance right here, we'd be out of the trade, right? Just waiting for price to turn around so we get back into the trade, right? So price would turn around here. We got back in here. We got out over here. Wait for price to pull, turn back around again. Got back in over here. And in this particular trade, that's actually what we did. We waited for price to turn around. We got in over here. Price went up. It pulled back some, and when it did, we got out. With this particular trade, this is a Great Britain pound Canadian dollar. We got out with 47 pips, locked in $3,594. Price went back down again, and now price is essentially, it looks like it appears to be in the buy zone. So if we wanted to, we could go ahead and start getting into it now, because right here at this support resistance, if we do put in a tight stop, price target is going to be here. It's about 182 pips away from where we are right now. Could be a good trade, but what we're going to do is we're going to wait and we're going to look at it. We're going to look at some more trades just to see which one out of the ones that's possibly available to us is would be the better trade. Okay. Pound zillion dollar. It's a pretty interesting one. This one right here came a huge way. And actually, when you look at it, it looks to be Well, it didn't close below the A, but it did go below the A. Let's see here. That one. Below. So what I'm doing is I'm using the smart fibs to go ahead and put my Fibonacci sequence on. Make it easier for me to see what's going on with this particular trade. Boom, boom. Pull back, boom. So here goes the D extension. So 166 pips away. As you can see, we haven't crossed over to the buy zone. We're still in the sell zone just as of yet. Wouldn't necessarily put in a buy right now, but it is close to being able to do that. So maybe within this next, within the next 24 hours or so, just to kind of watch this, and it's probably going to be going into the buy zone to be able to push towards that target. My suspicion would be for it to come back to this resistance area that's turned into support, and then wait for the bounce to push up. That's just my own personal thoughts on that. Just to kind of go back and look at what we were just doing. So we're looking at this fifth sequence here first, right? And what I noticed was that the C, originally, which we just thought was here, actually came all the way down to here, right? Which is below the A, right? Because here goes your A, there goes your B, here goes the C retracement. Now we know that when price pushes below the A, that pretty much kills off this whole A, B, C, D push, right? So I'm no longer paying attention to this pattern right here. Even though it did pan out over here, but I'm not paying attention to this pattern anymore. Now what we're going to do is we're looking at this pattern over here, right? This pattern right here, A, B, C. Actually, C. And then C did not go below the A. C. And it completed. All right, boom. Push up even higher. That's okay. This is a resistance. This line going across. Price continue to push up. Price continue to pull back, right? And it kind of did this little funky pattern over and over again. So what I knew then is that since it's completed this pattern here, price then started to proceed to move down, right? That the new pattern I should be looking for should be at the lows over here, right? And seeing how this low, or this low is actually lower than this low, this right here is not going to be where my pattern starts. It should be starting somewhere over here. And it did. And that's what brings us to the current pattern where we're at right now. Now, a couple takeaways you can take from this right here. You can say, well, you know what, price didn't close below the A. So long as price doesn't close below the A, then we're still in, still in play. Me personally, I just say a price pierced the A because usually the A is where I'm going to have my stop loss at or somewhere below it. I just say it negates the price and I'm no longer in it. And I'm looking to start my new trend either with this new low going in a direction that was previously going, or in the opposite direction, just depending on what price is doing on a larger time frame and on this smaller time frame. Just how I do it. You can find what works for you, but that's just kind of what works for me. Okay. So right now it's not a buy, but it's a hold, and it is a strong look. Like we really want to look at this right here, going forward over the next 24 hours. Pay close attention because the potential for this right here to make that U-turn is definitely there, and if it happens, we want to be a part of it. Okay. This one right here is the Great Britain pound, Japanese yen. Just because this right here was such a long one in the making, right? It's always since January, right? And it's another reason why I prefer the locking the profits and locking the profits and do the risk-free trades versus just dialing in and holding on. Because look at this right, man. This is January, man. This created the low here, right? This is January, what? January 22nd. It's almost a month later, right? We're just now getting back to getting close to our D extension. It's crazy. But you have multiple times since January to enter the market, get out, enter the market, get out, enter the market, get out, right? Stay out of the market, stay out of the market, stay out of the market, right? You know, enter the market, get out, 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 enter the market. You follow what I'm saying? Multiple times to grow your account exponentially. And so therefore, I think, you know, putting on a risk-free trade, it's like getting on, it's like making a base hit. All right, it's not a home run. This right here, you know, if you log into this right here, you bought into this, held onto it, yes, it'd be a home run, but man, it took you a month to get there, right? Versus getting multiple base hits, you know, and get some runs batted in. Hey, you're still winning, right? Not getting the big cheese all at once, but you're still winning. And I'm willing to bet that, you know, doing it this way, you're actually going to be making more money over time. This right here is 449 pips, right? So yeah, if you're doing 449 pips, you're doing $10 a pip. That's what, $4,449. That's great. If it's at $100 a pip, that's 400 or something. You know, 40 some thousand, I think it is. That's great. It's even better, you know. But the reality is, it's taking you so long to get there, right? And how many of you really going to be wanting to go through this drawdown in the process, and how many nerves could actually stand it to be looking at your account balance fluctuate like that over this time? So when you're using leverage, when you're watching your account balance, you know, one thing you got to ask yourself is, man, can I really sustain this? I mean, can I really, you know, go through this type of pressure over time? And most people are probably not going to, right? And so that's why the better option, at least in my personal opinion anyway, is to, once you get profitable, lock in your profits, right? And then just ride it up, right? And if you get stopped out, that's okay. Look for another entry point, because it's always going to be, if you're in a bull market, there's always going to be entry points. There's always going to be opportunities to get back in. Don't look at it as a one and done type deal. There's always going to be points to get back in. What you don't want to do is just do a willy-nilly or arbitrary, you know, entry point where you say, I just got stopped out. Oh, I'm going to jump back in. And then you jump back in at a high point, right, at a swing high, and price proceeds to go against you, you know, until it makes another low and then moves back up again. So you don't want to do that. But what you do want to do is look for your entries, right? Boom. And once it happens, boom, buy in and wait for price to push back up again, right? That's just my thoughts. I think it's a better way to trade. And let's look at the Great Britain pound US dollar. It's still like it's moving sideways right now. So, and potential there for it to go up, but right now it's moving sideways. So, once again, put a hold on these. I think it's only like two that actually look pretty decent. This one right here, Great Britain pound to New dollar, looks like it's possibly loading up to get over here. Yeah, Great Britain pound to New dollar looks like it's possibly loading up to get ready to punch back up. Like I said, I think it's going to probably retest this support / resistance before it does so. What was the other one? Was it the Great Britain pound Canadian dollar? This is kind of interesting too. But I don't think that right there is a better opportunity right now than the zillion dollar one. Uh, Same thing. It's kind of moving sideways. So this one right here, I think is another one's kind of like loading up. So if I had to look at it, I think the Great Britain Pound Zillion and the Great Britain Pound Aussie looks like they're loading up. It's doing a little bit of a pullback before it pushes back up. The question is, how much of a pullback will it do before it makes that push up? And like I said, just wait for it to happen. You know, the biggest thing I think one of the biggest mistakes most people make is that they try to get into the market too early, try to force a move, and when they try to force a move, you find out, very quickly that you can't force the market to do what you want to do. You gotta, you're gonna have to sit back and let the market play out, and the market's gonna do what it's gonna do. Period. Trying to think. Is there another one I want to look at? Is there another one? Let's look at this one here. U.S. Canadian dollar. This one right here, man, it really caught me off guard the other day, and that really sucked because I lost on this one. Here we go. Everything was going up, 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 making nice moves. Right? It already completed with 1, 2, 3, 4, 5. What was on its fourth? But yeah, 5 up moves. Let's see if we can figure out what went wrong. Because we got in over here, right? As price was making its way up. And then we got gut punched and price starts breaking down. So let's see if we can figure out what's going on. I think I see it right now. And once again, it's one of those things where you just got to kind of be wary about stuff, man. You got to, when you look at it, you really got to be careful about how you're seeing what you're seeing. If not, you may see something that you want to see, but not something that's actually there, if that makes sense. So here was the first push up, second push up, third push up, fourth. And I think it all happened right in here with this fourth push up. Price went back to the blue. Let's see, get out of here. Alright, so there's the first, what we thought was C. Price goes up, doesn't complete it, price pulls back down again. This turns out to be the C here, which actually is right here, this blue lavender. Price goes up, it hits it, goes a little bit above it. Okay. Then price proceeds to move back down. Now we're not gonna know this though until, so this right here was the C. Yeah, I mean that sucks. I don't really. You know what sucks about this is that if you look at this, right? I mean it. And so here's the thing. This is the reason why Fibonacci is not 100%, right? It can happen on any channel at any time, right? So we did it right, right? Price moved up, price went down. New A, B, C, D, N, right? Two more times, right? One, two. All right, price hit its target, which is well, actually, hold on a second. So this one here doesn't even count. So we're still going off of this one. A, B should be in our C here, which makes perfect sense because this is resistance. Price proceeds to move up, and then price pulls back down. Price proceeds to go back up again. Gets resistance plus downward trend line. Price moves back down, and then eventually crosses below the A, and just takes us out of the trade. Man, that sucks. And I'm gonna tell you, everything was done right on this one, right? Theoretically, what should have happened is this price hits back to this resistance, or yeah, and this resistance becomes support, and then pushes up, and it takes us towards our price target, our take profit. In a perfect world. Once again, like I said, Fibonacci is not a holy grail, but it does work more often than not. And I think once again the takeaway from this right here is to put on a profitable trade, take profit whenever possible. I don't care how small it is or how big it is. Take profit whenever you get a profitable trade. So that way, if you do get in a situation that's right here where price just breaks down for whatever reason, you're not in a trade where you're losing money. You never want to be in a trade where you're losing money, especially once you've seen the green and you want to lock that green in. It's better to get in multiple times than it is to take a huge loss that now you got to go back in and refund your account, or you got to reduce your trade because your price moved against you. Okay. Anyway, guys, listen. That's it for me for tonight. I am getting out. I think that was a good lesson learned right there. It's a good look. But I'm getting out for tonight, and I will be back actually because today is Friday, so I won't be back until Monday. So have a great weekend. Once again, I apologize for not being around yesterday, but I hope you enjoyed it. The recap. I hope you have a great weekend, and I will talk to you soon. Take care. Bye for now.